All right, let's talk about renter's insurance. It's one of those financial tools that's super important, but for some reason, a lot of us don't really get it. So today, we're going to break it all down: what it is, why you absolutely need it, and how to make sure you're actually protected.
So let me just start by asking you a question. Picture this. The absolute worst happens tonight, and a major fire rips through your apartment building. Everything's gone. Your laptop, your couch, all your clothes, just gone. Who pays to replace all of that? Seriously, who foots that bill? If you're thinking, oh, my landlord's got it covered, well, you're not alone. But that is a really common and potentially very expensive mistake.
And that right there, that leads us to probably the biggest myth in the entire world of renting. So many of us just assume that our landlord's insurance policy acts as a big safety net for us too. But spoiler alert, it doesn't. That policy has a completely different job to do. Okay, so check this out because it makes it super clear. Your landlord's insurance, that's for their stuff. Think about the building itself, the roof, the walls, the plumbing. That's what they're protecting. But your renter's policy, that's for your stuff, everything you own inside those walls. The two policies are meant to work together, side by side. One protects the house and the other one protects your home. So, what is this safety net actually made of? What are you paying for? Well, a standard renter's insurance policy is basically built on three main pillars of protection. You can think of it like a three-legged stool. If one of the legs is missing, the whole thing is going to topple over. You need all three to be stable and secure. So the first pillar is the one everyone thinks of: personal property coverage. This is the part that protects your stuff, your electronics, your furniture, your clothes, you name it. It covers you from disasters like a fire or theft, vandalism, even something like a burst pipe that floods your living room. It's the coverage that literally helps you rebuild your life if something awful happens. But here's a really critical detail: how the policy pays you back. You'll usually see two options. First, there's actual cash value, or ACV. This pays you what your 5-year-old laptop is worth today, which, let's be honest, is not much. Then there's replacement cost value, or RCV. Now this is the good stuff. This gives you the money to go out and buy a brand new similar laptop. Yeah, RCV costs a little more each month, but the payout difference can be huge. Okay, the second pillar is personal liability, and honestly, this one is a huge deal. What if a friend comes over, trips, and gets seriously hurt in your apartment? Or what if you accidentally let the bathtub overflow and cause massive water damage to the apartment below you? This coverage is what protects you from lawsuits. It handles the legal fees, the medical bills. It's like a financial firewall protecting your savings. And that brings us to the third pillar: loss of use. Remember that fire we talked about in the beginning? If it makes your apartment unlivable, where are you supposed to go? This coverage helps pay for all those extra costs, like a hotel room, meals since you can't cook, and even boarding for your pets. It's what makes sure a disaster doesn't leave you stranded. So this table just lays it all out beautifully. You can see how it all works together. Take a look at that liability scenario. A guest slips and decides to sue. With a typical $100,000 limit, your policy just steps right in and covers their medical costs and your legal bills. Or in that fire scenario, boom, loss of use kicks in to pay for your hotel. Each pillar is designed to tackle a completely different kind of financial risk. Now, it's just as important to know what your policy doesn't cover. I mean, let's be real. No insurance policy covers every single thing under the sun. And being aware of the standard exclusions can save you from a really nasty surprise later on. For instance, as you can see here, damage from things like floods and earthquakes is almost always left out. For those, you need to buy totally separate policies. And notice this other big one: sublimits on high-value items. Your policy might cover, say, $30,000 in total property, but it might only pay up to $1,500 for stolen jewelry. So if you have some expensive stuff, you're going to need to get extra coverage for it. So how do you actually build a policy that's right for you? This is definitely not a one-size-fits-all kind of product. Let's walk through how to figure out exactly how much protection you really need. First off, how much is all your stuff actually worth? The absolute best way to find out is to create a home inventory. I know, it sounds like a huge chore, but it's simpler than you think. Just walk through your home, room by room, and take a quick video or some photos with your phone. Then just add up the rough value. That total gives you the perfect target for your personal property coverage limit. Now, for liability, most basic policies will start you off at $100,000, but pretty much every financial expert will recommend getting a minimum of $300,000. Why? Because a serious lawsuit can blow past a lower limit so fast, and then they can come after your savings and even your future paychecks. And the best part is, the extra cost for all that peace of mind is usually just a few bucks a month. And finally, we have the deductible. All this is the amount you agree to pay out of pocket on a claim before the insurance company starts paying. It's a trade-off. If you choose a higher deductible, say $1,000 instead of $500, your monthly premium will be lower. The key is to just pick an amount you could comfortably pay if you had to on short notice. Okay, so you've done your homework, you've got the policy. What happens when you actually need to use it? Knowing the right steps to take can make a really stressful situation feel so much more manageable. The most crucial thing is to act fast and document everything. If it's safe to do so, try to prevent any more damage. Then get your phone out and take tons of photos and videos of everything that's affected. If a crime was involved, like a break-in, you need to file a police report right away. Then contact your insurance provider to get the ball rolling. And that home inventory you made, it is going to be your absolute best friend in this moment. You know, at the end of the day, this isn't just about being able to replace a TV. As the source material puts it, renter's insurance is really a fundamental component of responsible financial planning. For a pretty low cost, it protects you from those unexpected curveballs that could otherwise be financially devastating. So, I'll leave you with this to think about. Your landlord has insured their building, their investment, but have you insured your life inside it? Now that you understand these pillars of protection, you can answer that question for yourself and make sure your financial foundation is truly secure.